Hey Mayon, hi there. Okay, so people, what we got to do today is jump right into the price. There's stuff happening and new things came to light. I'll discuss those in a moment. The the audio and the video quality is gonna still be like this today. I'm still waiting for my package to arrive from the United States of Freedom. They're going to bring me a microphone, a camera, everything, and tripod, and so forth. And those things will be put to use. I've also got all the paraphernalia from my cheap neighbor China to make the things work properly. Did my research. I know some good electronics companies there, and they're going to give me all of the camera paraphernalia that Amazon, too expensive on. Right, so that's audio and video. That will be changed next week. I wonder if I will do a live stream next. If I don't do it on the Sunday, I'll do it on the Saturday or perhaps on the Monday, because next week is the week that I travel every year to change my visa. My visa has to be renewed every year. A Thai visa lasts for 1 year. So then I have to leave Thailand, come back and reapply for it. And that's what I'll be doing. So I'll be spending a week in Malaysia, in Penang Island, attending a Bitcoin meetup there, speaking and enjoying the island for a weekend, or for a week actually. Aries, you here with your dwindling trade account. I'm sorry that I'm laughing, but this has been the story on my side as well. That was a very unpleasant 4 weeks we have behind us. I made up most of it yesterday, actually, when price did start moving. So see you on March 31st for sure. We'll meet there at D. Lovey's Cafe, right? Guys, I don't know what to do about the light. If I don't put these lights here, you can't see me. It's just like there's sunshine outside, but I'm in my warehouse like space, right? Here's my desk, there's my bookshelf, there's my electronics lab, there's my eating table, here's my laptops, there's all my tools and everything that I virtually own in the world that I use to work with day to day. If I don't put these lights here, you can't see my eyes and my face. But if I do have the lights here, it's blinding me, man. I'm like looking through the haze of light to try and see the screen. Aries, you're the one who keeps harping about the danger of leverage. Yeah, leverage is dangerous, guys. And it's fine when the market is trending. You quickly get your pace with the correct leverage for that price action, because while it's going, it tends to be uniform. Price action tends to be uniform. But the past 4 weeks, man, that was tough. 2015 was tough like that. There were some moments in 2015 that were tough like that. October, November of 2016 were tough like that. But this has been some of the most sluggish, most difficult price action I've ever traded the past 4 weeks. I remember 4 years ago, not even 4 years ago, 6 years ago when I was trading gold a lot, you kind of, I go swimming and then I come back to my bamboo hut, switch on my laptop, see the gold price, what it's doing, do my trade at 2 o'clock, do my trade at 4 o'clock, and perhaps another one at 7 when the US market opens. And you'd usually win. You know, sometimes you'd have a bad trade. But the past 4 weeks, every single one, the signals are wrong. When the signal is right, something else goes wrong. I don't know what that's about. I think it's contention. I think it's because the bulls are resisting what's happening. I also think the bears have become scared, so they don't go for their trades. So everyone's kind of like double, you know, everyone's, what's the word? You double guess the price action and nobody's confidently trading. It had been better yesterday, you know, once the decline got going, but then now it stopped. 7,600. So let's look at that. Let's start looking at the price. Mike, you're asking how does that difficulty compare to other crypto markets? No, I don't. Mike, I don't trade other cryptocurrencies and I don't trade other markets. I only trade Bitcoin. The reason why is because Bitcoin is more lucrative than any other market in the world, in the history of the world, and out of any of the cryptocurrencies, it's the most lucrative. The price movements are the bigger. Okay, so it's been a real pain the last month, but I find that it pays to just focus on one thing and study that thing from morning to night and sit and watch that market and be familiar with it and trade it when the moment comes, when the signals fire. So if I'm going to be trading other markets, surely, I mean, the methods we use, like the Tones time indicator or this MA method, one can apply it to any market, but I don't want to do that. I trade Bitcoin because I can deposit Bitcoin in the exchange. I can bet Bitcoin to win Bitcoin. There's no fiat involved ever. So my trading is anonymous. My earnings are anonymous. My spending is anonymous. I only go to the bank for official things. You know, like I have to pay so much for a visa. Then I put it through the bank so that the whole of Thailand's bureaucracy can see it. And there are no questions like, but where did you get that money from, that fiat from? But as for Bitcoin, neither my country, South Africa, nor Thailand knows anything about my Bitcoin. The exchange doesn't know who I am. I make my money in the OKX exchange, and it's my business. It's private and it's anonymous. I guess you could trace it to me eventually, but you know, even in that case, I tend to reuse addresses. I don't reuse the same address. So, yeah, you know, just some common sense practices. Let's look at the price, guys. Let's look at the price. This is the OK coin chart. Let me change to Bitstamp linear 1 week. It might be a bit messy here. This might end up being very messy. That's not good. This is going to be better for us. Brave New Coin Liquid Index. Straight arithmetic view. On the left there you see the fib extension tools that gave us each and every high except for two of these fib numbers didn't give any high because price just went past, which one was it? I think number 5. Price didn't stop at number 5. Then there was another one, number 34. No, that was 11. One of the others. Oh no, this is correct. So these were very useful. Now we will, once price has done its thing, right, and this correction is over, then we'll have to find a new set of base waves. These are the base waves we used down there. I used from the 2015 January low up to that January high, and I also use from the January low to the October high. And both of them gave exactly the same levels. Well, more or less the same, you know, within like a few $100. And it took a while to calibrate them, but once we'd gone up to like number 5 or 8 on this one, it was calibrated, and then price stopped at each fib number after that. So once this correction is over now, then we'll have to wait for new base waves to form, and then we draw these again, and we calibrate the next advance, right, where it's going to hit. You see that price always works by fib numbers, right? That's not because traders use them, or it's not because of magic, it's just because of psychology, right? I think we've had this discussion before. The fib ratios and the fib numbers are the underlying ratios of all life and all growth and all thought and all art and music and everything, you know. If you look at harmonic frequencies in a vibrating string of, say, a piano or a guitar, those are all fib relationships. There's no harmonic relationship in a vibrating string, or any physical relationship that is not a fib number or a fib ratio. The same is true of spiral galaxies, of plant, of cells, of proportions of the human body, of art that humans produce, of our concept of beauty, of a face or of a composition, and also of market. The difference with the market is the entire collective is creating these relationships, and time relationships is creating it together, in concert, because everyone's interacting at the same time, right? The market is an immediate interaction between all of us, everyone who participates. So that's why fib relationships are so consistent in the market. So when we find them, then we can stick to them, because they mostly repeat, and they repeat fractally at every time frame. So that's the basis of how we predict price and retracement. Similarly, if I go back to the arithmetic scale, retracement also happens by fib relationship, right? So you'll see that. I don't know why this one is slightly off. Let me go to a different one. You can see that this correction here at 9,500 was happening at the 50% fib, and when price pushed up to this level, it's at the 0.382 fib, and we got stuck here at 0.618 fib, this area here where we'd been stuck for so long. My finding in Bitcoin is that most of the large corrections retrace to between 0.764 and 0.89, which is like roughly 76% and 90% retracement. So if that is the pattern in Bitcoin, if that's the case more often than not, then we would expect Bitcoin to retrace to 90%, and for the correction to be psychologically incomplete in the mind of the market collective until it has retraced 90%, right? If we get a 0.764, 76% retracement, well, you know, and that's going to be $4,500, well, we'll have to assess, you know, because if price then bounces off of that and shoots up, and we're starting to get new highs, well, then we know, okay, that's an instance of 76% retracement, and it's possible, and the market's okay with it. You know, it doesn't have to be 90%, but mostly it is 90%, and furthermore, there is a a higher chance of it being 90% because that's the slow crawling level of the 1 week 200 MA. And the 200 MA, right, whether it's the common usage of it by all institutional traders in the world, and that it's just kind of become a security blanket, or whether the 200 MA is important for some other mystical reason, I don't know. But price returns to its 200 MA at every time frame at some point. If it's been away from it from the 200 MA too long, it's going to eventually return to it. You can bet money on it. Now, when it will return to it, we don't know, because look at the 2014 correction, 2014 to 2015. I'm going to switch off the annotations. This is the 1 week chart, 1 week MAs. From the $1,200 high, price came to the 50 MA, like it's doing now, bounced off of it to back above the 20 MA, which is going to take us to about $12,000, then fell through the whole lot until it settled 1, 2, 3, dragging its ass right on that 200 MA for a few months there. This 200 MA is where price wants to be now. Unfortunately, it doesn't show, but you can see a similar kind of thing happened here. The 200 MA would have come up underneath there. I believe price would have returned to its 200 MA with this move. There's no 200 MA drawn because there's no prior price history. And then once it had done that, it was ready for the next advance, right? And it scraped along the 20 and 50, the 20 MA over there, you know, as it kind of did there on the 20 MA and the 200 MA. So these MAs, the only reason why I know about them and why I use them is because I switched them on for no particular good reason. I was looking for something. I started noticing that the 200 MA obviously is important in Bitcoin, very important. And I found that the 20 MA is very important. The reason why I included the 50 MA and the 100 MA is merely because they are sort of coefficients of the 200 MA, right? Divided in half 100 MA, divided in half 50 MA. Divide the 50 MA in half, which is 25. But okay, 20 MA is close enough. There's a better fit in the chart. I'm going to finish talking about the MAs there, but what I do want to point out to you guys, right, to anybody watching this video, whether you're watching it live now or you're going to watch it later, in the description below the video, there is I can't see it now, but in the description below the video, there is a linked video by the man called Tyler that does hyperwave. That video, Tone Vase pointed out, and that video is great because the guy goes into a rudimentary discussion about moving averages, how they interact with each other and how they interact with price. And he actually does it on paper, you know, like not on a fancy like graphic. He does it on paper. And I was surprised to watch that video because the man is speaking about everything that I had come to learn and apply in the Bitcoin chart. He's now introducing it, that man Tyler of Hyperwave, he's now introducing it to Bitcoin as a new trading method that he calls consensio, kind of a play on consensus and so on, and I think he's trying to make it catchy. And he's unaware that I've already been doing this in Bitcoin and doing it here at Cryptocurrents. He's just unaware. I mean, it's not like he's trying to steal my method or he's making out that I don't exist. He's just unaware of me. Tone Vase knows my trading method, but I don't think Tone, when I showed Tone this MA method, he was too busy with his phone and his camera and his you know, I didn't think he registered it really well. But if you watch the video by Tyler, you're going to see a very fundamental explanation and discussion of what RMA is and how do they interact with each other and price. Something that I should have perhaps have done. That's perhaps something I should have done, you know. But it never occurred to me to put these things on YouTube, and it never occurred to me when I began cryptocurrency like four, maybe 5 years ago, to put such detailed explanations for people to read. I thought, no, that's just going to be boring. Let me just show them the signals, you know. Let me just show people a few pictures, like, you know, take an easy one, the 1 day chart, and show them the decompressions. And, you know, and then show them, like, you see that? You see the decompression? You see these signals decompressing there? That's what we want to trade. That's what we want to trade. That's what we want to trade. I hope you guys can see it. Maybe it's too small on your screen. That's what we want to trade, you know. And then, for instance, this. That's what we want to trade. We will wait for months, you know, and when we see this in the 1 day or the 1 week chart, this is the time that we buy heavy, and when all of the buy and holders at cryptocurrency come into their own, because leverage traders are having fun and headaches and soup crying every day, right? We got our work cut out for us, because there's signals all day long if you want to make leveraged margin trades. But the buy and holders have to wait for this kind of thing, or to the downside, they've got to wait for, you know, these kind of signals, which we had a 1 day signal like that, and then it kind of petered out, and now we're somewhere in this phase of trend where we're going to switch from we're going to complete a decline and then switch to a switcheroo, you know, where it does an ABC to the upside, because I think these bulls can't contain themselves anymore. Just now, as they're losing the will to fight, I think that the bears are going to stop selling, and the bulls are slowly going to pick it up. It might take a few weeks to set up, and then we'll get a great signal to the upside. And I recommend that when we hit that 200 MA to the upside, that all of us cash out Bitcoins there. Now, there isn't a 200 MA to the upside. What am I talking about? Oh my goodness. Wait, I need to double take. I don't know what I just saw. Oh, we're busy cutting below the 200 MA. We're still in this phase, right? This is about to happen. We're about to get that signal. If everything plays out the same, I don't see why it shouldn't. You see this signal here where the 20 MA kind of comes to the 50 MA, and then both of them collapse through the 200 MA? No, I don't want to add an alert. This is what we're about to go into. You see there, they're kind of compressing together. In fact, it's gone over slightly because the bulls over-egged the pudding with this wave. They just held on too long, and it pulled the 200 MA as if it was, the 20 MA 1 day, 20 MA, as if it was a buy signal. And then at the moment of the buy signal, they collapsed through there. Now we're going to go through the 200 MA, I guess to about 6,000 or 3,500, something like that. And then when we come return up here to 12,000, 200 MA or 100 MA, right there we're going to have to be very nimble and quick, because that's when you're going to cash out Bitcoin, right? And because after that it's going to be sell, 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 sell again. That's one scenario. If this correction plays out like the 2014 correction, and I don't see why it shouldn't, because this has been a massive drawn out advance that lasted for years. So you'd expect a correction that is drawn out and lasts for a year or two. Right, so there's still a lot going to change there, and it might play, I believe it will play out in a similar shape and kind of sequence as the 2014 correction. However, there's a different possibility, and this is where this man Tyler comes in again. I can't believe I didn't show you that. Oh my God. And I didn't have the chat. That is so wrong. I'm saying that the 2050, the one-day chart, 2050 MAs have crossed over as if for a buy signal, but now they're collapsing below, and with price below the 200 MA. So we're going to come down to 6,000 or 3,500, somewhere over here, and then come back to them, to the 200 MA or the 100 MA, somewhere over here in the middle of the year. We're going to be back up here. So we've got some journey down and then back up to there. That's one scenario, and I was explaining that it might take a long time, right? A year or 2 years for all of this to play out. However, there's another scenario. There is one other option, and that is the hyperwave option. Now I'll switch on the annotations, go back to arithmetic view. If you watch that video by Tyler of hyperwave, you'll see that his hyperwaves kind of build up like this, like these long stretches of trend lines supporting price. And what happens is that, where am I going to find the upside of this damn trend line? Don't worry about it. The caveat is that price cannot close on Monday, cannot close below the daily candle and the 1 week candle cannot close below 7,600 according to his hyperwave knowledge, and that's his own idea, right? That's his own formulation there. He formulated this notion of a hyperwave, that there is now a new wave that's going to start from here, something like this. I'm not exactly sure what his measurement of it is, but it is completely dependent on price not closing below 7,600. Else, Bitcoin's in a else the hyperwave is over and Bitcoin's in a long-term decline. But if we don't close below 7,600 on Monday and we get an upside reversal, right, then the previous scenario I spoke about, that we're now going to go below the 200 MA, spend some time down there, then come back up to it in 3 months. That scenario won't play out. If it's the continuing hyperwave scenario, then from here on out, we're going to start a new advance at a steeper angle. At a steeper angle than this. It's going to kind of go up here, you know, like a 45-degree angle from here on out. That's the way, the phase 3 or phase 4 of hyperwave. I'm not 100% sure. So let's see. Monday will be important. We'll be able to tell a lot about price, because certainly the bulls love this hyperwave idea. It's now become quite well known, widely spoken about. Bullish psychology will be very dependent on it, especially all the followers of Tone and Tyler, who are kind of mixed in with a lot of us in cryptocurrents, right? The bulls in these three areas, in this audience, are going to be dependent on that $7,600 close on Monday. Otherwise, they're going to be a little bit depressed. They're going to feel that, yes, it didn't close above 7,600. This is a bear trend, and they're going to sell, right? That'll then enforce the scenario that I've been speaking about all along. But if we close above 7,600 and a new wave of advance starts, that's a different story. Then this correction is over today. Then the correction is now over. But I don't think it is. I honestly don't think it is. So that is why where we are now, I'm going to drop down. I'm going to go to Bitstamp. I'm going to switch off the annotations and go down to a smaller time frame, say 4 hour. You see that price is at 7,600. Can you? There it is. 7,600, right? So this level is important. The price approached it very carefully today. You know, I was closing my trade in the 5 minute or the 1 minute chart. You see there, it closed just below at 7,560, 50, something like that, and immediately went to 7,600. Now it's testing 7,600 again. So this is the thing. This is the thing that's on everyone's mind. Whether it's psychological or whether this is the hyperwave message that is now permeating the community, I don't know. Let me just, from that discussion, of course, 7,600, I just wanted to point this out. I might have drawn it in a chart previously. A 4 hour chart is nice for this. I'm just going to stick to arithmetic chart. 7,600 is important because if I can just squash the price action, because it is this level, you see the highs here, you see the highs at 7,600 in Bitstamp, then price went above it, came back and tested it over there. And this is where 7,600 became significant, so that while price was declining, it stopped right at 7,600 on this second last low in February. Came down through it. When it came back up to it, it stopped at 7,600 again. Tested it like 2 or 3 times. And what we've been dealing with most recently is that I can switch on the annotations and go to a 1 hour chart. That'll show it more clearly. When we came down from the price action in the beginning of March, price stopped at 8,800, bounced, made this very uncomfortable correction here, and this is where our trade started going wrong. Our 4 hour trade got stopped out. Price was struggling here, could drop through it last week, and then we had another uncomfortable correction in here. Now that bounce there was off 7,600. The bulls tried to establish price above 8,800 support, couldn't do it, and when they failed, we went through. Ali's asking if there's a reason why I'm holding a joint while I'm streaming. Yeah, you must. Smoking is natural. These plants grow all by themselves in the woods. Let me light that up. Bounty of the good earth. Okay, just a minute, people. I just need to check something. I'm looking at the OKX chart, 1 week contract. This is a 5 minute chart. There's the same kind of contention zone, but in yellow. I don't know, like that was the color I had handy. This, what we're seeing here, I'm not sure, because we haven't got a new low, right? You see the earlier low. Then there's a secondary low there, and now this is a tertiary low because it's making higher lows from there to there, and it's making higher highs on each one of these waves up. So either this is a large correction, or this is this correction is over, A, B, C, something like that, and now we're starting the next wave down. As much as I'm for advance, as much as I'm for decline during a bearish phase, and as much as I'm for decline at the moment, I don't think the moment is right, because I think everyone is really exhausted from what happened during the last few weeks. And this was absolute torture to trade. I mean, look at that. What is going on? You know, it's with the bulls and the bears, man. It just doesn't end. Look at that. And each wave down was torture. It was absolute pain to trade, you know, compared to a few months ago when price would just slash down like $300-400 at a go and correct a little bit, do another $200. Here, in this, especially this wave, there was a correction every $50. Every $50. So right now, I don't want to discount decline continuing, but it looks to me like we've got an A, B, C here. If we look in the 1 minute chart, it might even be more obvious. Coming down, then A, B, C. You see that? A, B, C. I know this is a C wave because it's got 5 waves. 1, 2, 3, 4, 5. So this must be A, B, C. It could also be A, B, C, something like that. But here we have 5 waves again. 1, 2, 3, 4, and it's finishing wave 5. So I'm thinking that this is the low, and then it's going to go up again to try this level up here again, 7,800 in this chart. So price is kind of vacillating around 7,600. This is now the thing on everyone's minds. So I don't think that we should be taking any action in the market right now, because obviously there's a 1 day signal that's going to fire tomorrow. There is a 4-hour signal that is still underway. Well, that's dubious because it was closed. It was closed out there. But I know that there's a 1 hour signal that fired there, and it's still active. We didn't trade it because I just didn't have the cojones. I mean, I didn't know what to say anymore. It's like, oh, here's another signal that's gonna fail, you know, like that one and that one and that one and that one, you know. Then it's kind of like, well, I have to stop calling, right? Why do the same stupid thing over and over again until we see an outcome? So okay, we saw that price did decline. It's at 7,600 or near 7,500. Now we have to wait and observe for tomorrow. Switching to this MA indicator, I'd wonder how you guys are finding this. Is it any use or is it confusing? I'm going to switch to the chart. I'm going to switch to the live chat. I'm reading. Tyler is going to use an intermediary length MA in addition to short and long, which is interesting. Yeah, Aries. So in other words, he's going to have his 14 period moving average. What else is he using? Is he using a 24 or a 54? And so obviously he's going to squeeze something in between there, like 30 period or 27, something like that. Yeah, sorry guys, you couldn't see my chart. Tyler is bullish. Sure, sure, he's very bullish. I don't know if him and Tone are justified. Tone was mentioning in his show this morning, I was laughing, because Tone was saying Tyler is very bullish, Venzen is very bearish, and Tone was saying that he's somewhere in the middle. But I find Tyler and Tone are very easily seeing advance, you know, and they're very easily thinking that certain levels can hold, you know. I guess it's necessary to have a range, you know. There's a guy like me that's like, I love trading the bear side. I love trading decline, not the kind of decline we've had, but normally I do. I like to study the charts from a bearish perspective. Perhaps I'm too bearish most of the time, but it's nice to have that balance. Mayon, you think, it depends who you think moves the market, right? Mayon, your question is, you think that the theories of respected gurus like Hyperwave or Tone, or, you know, if people were to consider me a guru now, but I'm not so public with my views, right? I mostly keep them inside of cryptocurrencies. You're saying that those views might become self-fulfilling prophecies because people make decisions on it, like it sways the outlook of the market, right? I know what you're saying. So here's my perspective on that. If we think that retail investors, in other words, retail traders like us, guys who are in the social forums, talking to each other, looking at Twitter, have trading view accounts, listen to Andreas, listen to Tone, listen to Venzen, listen to Hyperwave, and maybe some others, that guys like us move the market en masse, right? So all of us together make decisions and then move the market. Well then, yes, if we're all watching the same analysis, we're going to tend to make the same decisions. But my view is that we are not the people who are moving the market. For instance, when price kept going bullish during the past 2 months, and the bulls fling to the upside and they don't make any progress, then they fling to the upside again, don't make any new high, then decline starts, then the bulls just defend a level, you know, 8,800 for days and weeks, and then eventually they lose that without making a new high, and then they do it at the next level. I don't know if I think those are really big pockets that do that kind of thing. I don't think retail investors have the balls to go stand in front of an oncoming train, you know, and to catch the proverbial falling knife and to say, I'm going to stop price here. You know, you get these cartels of bulls, they talk with each other, they coordinate their moves, they're probably in cahoots with the exchanges, and on certain days, they do things all together across exchanges at the same time. Not like massive things, not like throwing $1 million in the market, but slowly applying pressure, like defending a level with just absorbing the sells that go through that level and just buying price up that a little bit, you know, and having bots or teams of traders that just do that, you know, the whole day. That is one perspective. There's no proof that this happens, but it's certainly, I mean, you do find that in behavior like that, cartel behavior by large pockets has been uncovered in traditional markets. It's been busted by the SEC and prosecuted, and guys went to jail for collusion in the market. You know, so I would believe it happens in Bitcoin because it's so much easier to do it, and there's no regulation that these guys have to be scared of. You know, they're not breaking any laws. It's kind of unfair, but in an open market, it's not immoral, right? So I don't know who moves the market. Do these guys allow a certain range of movements? are there points beyond which the bulls or the whales lose control? These are interesting questions. It's almost like cosmology, because, you know, who is the bulk of the market? Who's doing the pushing and the shoving? I wonder myself. I'm not sure. Kun, you're asking if I can tell what the 10, 20, and 50 MAs are. Kun, oh, for you it's a bit confusing. I'm going to explain it to you now. I'm going to come back to it. Yeah, the indicator it's highly flexible. That's why it might be a bit confusing. We'll have a look at it just now. Yeah, Aries. Aries, yeah. Tyler is going to use certain MAs because they're popular in the traditional markets. Here is the indicator. I've got it in a 5-minute chart, just so we see lots of signals. All right, because if you go to a larger time frame, 4 hour, 1 day, there aren't as many signals. Maybe that's a better idea, because then here's the price action since the beginning of February. You can open up the settings and blank them out, right? You can turn off and reduce the visual noise. So now there's nothing on there. All right, blank chart. So where it says TF short MA, TF long MA, then TF 100 MA and TF 200 MA, that means time frame, right? The time frame of the chart that you're looking at, so the 4 hour chart, your time frame's short MA, which is, you can set what it is, but of course we want it, by default it's 20, and the longer one is 50, because that's what we use, right? So by default they'll be there. So that's your 20 MA, your 50 MA, your 100 MA, and your 200 MA. And you can select the color and the thickness of the line, and so on and so on. And that looks like that in the 4 hour chart, and that should look familiar to you. The 20 MA is a little bit not so clear, so let's increase its visibility by making it thicker, right? So this is what we've been trading since the beginning of the year. There's the first 4 hour signal we traded. There was the second one, but we only caught it much lower, unfortunately, because we were waiting for 1 hour confirmation, and then we got in hot water down here. But this one was pretty good, and this one was a good trade. This one was the best one this year so far, I believe, because we rode it quite far. Okay. So at its basic, this MA indicator gives you your 20, 50, 100, and 200 MAs in a way that you can only use one indicator, right, and display them. And there they are. Those are the only things that are visible. So now we can say that when the 20 MA crosses the 50 MA, when the 20 MA crosses the 50 MA, which for us at Cryptocurrents is a MA signal, right? That's a buy or a sell signal. We want to see a color bar. So you switch on this background color here. This is for the bars. I put a legend in the forum that deals with this indicator. There's a legend there. I linked it in a comment earlier today, I believe, in the Bitcoin forum. So you can just easily reference oh, what is what? You know, what these are my normal MAs. What is this background color? Oh, it's the color of the bars that show up. So the bars are, these bars are a little bit pale, but if we just look at this signal here and this crossover here, so this 2050 MA crossover cell, 2050 MA crossover cell, you can see that there's a red bar exactly at the crossover. This trade will remain open until you find a purple bar that closes a sell and a blue bar closes a buy. So that's what the red, with the purple and the blue vertical bars are all about. They're just closing the trade. Why? Because price has advanced the distance of ATR, of the average true range of price, has advanced that distance to the opposite side above the 20 MA. So that's saying your dynamic stop loss has been triggered. That's what that purple bar says after the red sell. Now, of course, if you measure the distance from where you bought to where you took profit, that is not very good at all. Right? That's not a very good trade distance at all. It's only like a third of the entire move. But remember that we were aiming for, like, I can't remember what we were aiming for. Was it 9,000 or 9,500? I'm not sure. So you would have taken profit for half of your position near the target area, and then the other half of your position would have been closed out there. Why do we let this dynamic stop loss close us out? Because we don't know if this is busy going down to decline again or that it'll go up. So we need some mechanism that puts it out of our hands, so we don't sit there hoping and praying and watching price move against us, that there's some mechanism that just says, okay, the other half of your position that you haven't yet taken profit on, now's the time to close it by faith in the market. And every trade we do is like that. So I just want to have a look at what this is doing. Keep an eye on the current price. So yes, at the moment we remain below the 4-hour 20 MA. As far as we can tell, decline is going to continue to 6,000. You know, unless the bulls do their best today to stop it at 7,600. So far they're doing okay, but I don't know. I don't know how, if they're going to succeed. So people, this is a 4-hour chart. I want to remove some more confusion for you. We can see in the 4-hour chart, we can see the normal MAs that we use, 20, 50, 100, 200, and now we've added some bars at the crossovers and at the dynamic stop loss closeouts. So what are these other things? Every signal that we trade, we have a look at. Every signal we trade, we have a look at the next smaller time frame, and we have a look at the next larger time frame. So if we're talking about the 4-hour time frame, right, our main time frame, then the next smaller time frame down from there is the 1-hour time frame. So that's the smaller short MA and the smaller long MA. That is as per defined here, the short MA and the long MA, 20 and 50. Those are the default values. One can change them. Like if you want to try Tyler's kind of numbers, periods for MAs, you can change them here. But I'm just going to stick with 2050 MA. So your smaller time frame, short MA, is your 1-hour 20 MA, and the smaller time frame, long MA, is your 50 MA. Now you're displaying the 1-hour 20 and 50 MA on the 4-hour chart. simultaneously. So to see them, you have to switch off, you have to change their colors, or you got to switch off all of this time frames, regular MAs, and now we can see look, it's really tight, close to price. The 1 hour 20 MA and the 1 hour 50 MA in blue. Here we've got oh, that's a closeout. That's a closeout. When the 1 hour 20 MA crosses the 1 hour 50 MA, that there is a trade is a confirmation signal at the 1 hour time frame for this our 4 hour time frame. So you can see there's quite a few of them. Sometimes they don't make sense. Sometimes they are good signals. I consider this one a good signal. I consider this one here an alright signal. I consider this one a very good signal. This cell here is a very good signal. We're looking at the 1 hour signals, 1 hour 2050 MA signals being given, but we're looking in the 4 hour chart, displaying the smaller time frame as MAs. So if we look at for instance, we look at this buy signal right here. You see this horizontal bar exactly where my cursor is? You see that was the 4 hour buy signal being given there, and this is the 1 hour time frame buy signal that confirms it. So you see that, and you're like, right, I'm in. There's one down there. Why it's not? Oh, it won't signal. Yeah, it won't signal because it's at the smaller time frame. The reason why we got in this decline late, for those of you who were at Cryptocurrents at the time, there's our 1 hour sell signal. We only got our 4 hour sell signal more than halfway through the wave. And we got in there, we didn't even get in there. We got in like just after that. So we were trapped in this correction down here. As we got in, price corrected, and eventually it flung out more than our stop loss distance. You see on this fling up here, on this advancing surge, there's our dynamic stop loss closing at the 4 hour time frame. So if I bring back the 4 hour signals, the 4 hour MAs, I'm just going to bring back the 20 MA and the 50 MA. You can see where they cross. There's a vertical bar. Where they cross, right here, there's a vertical bar saying it's a buy. There's the 1 hour confirmation for the buy. So you see that. A few bars later, you see that, and you're in. There was a better example during this decline. There's your 4 hour sell signal. Your 1 hour sell signal happened several candles earlier, right there. And you can switch on a little visual indicator here at the bottom, small time frame buy, small time frame sell. And it'll make a little C, a little arrow with the C there, where you're getting the small time frame signals. So for instance, let me just come back to this. Here you're getting a 4 hour sell signal on this crossover here. I think almost a day before it, you got you see that little C there? That means that the 1 hour 2050 MA are crossing to the downside. Normally the small time frames happen before the large time frame signal, but not always, but mostly. Then there is one more thing that I want to add, just so that everything had been discussed, is we can show the larger time frame, in other words, the 1 day, 20 and 50 MA. And it's these thick lines. I made them thick and I made them blue and green again. So where they cross over, that is a 1 day crossover. There's a 4-hour signal just before it. There's a 1 hour confirmation just there. There's another one up there. So there's a whole lot of signals on this wave coming down. You see, so it's right off of the peak. There's a 4-hour signal where that red bar is, but it's difficult to trade it because your 1 day MAs are still moving up. They're still pushing higher. So you take some risk to say, well, I trust that this is going to go through, that it's not just going to bounce off of them and go higher, such as what happened. I wish they would not show me adverts. You see, price comes down, reverses and goes up. So when you take a 4-hour signal, sometimes you want to know, where are my larger time frame, where are my 1 day MAs? Because there's more confidence in trading a 4-hour signal after this crossover to the downside than there is before it's happened, like what's happening right now. You see there's a 1 day crossover happening. This is potentially very, very bearish. I don't know what's going to happen. We'll have to see in the morning. I might prepare some TRs overnight. Then there are other little things in the indicator that you might use or you might not use. Like you can add your 100 and 200 MA, but they tend to clutter it up a little bit if you're not used to seeing all these things. I'm going to put them on now. These, why are they not showing? Oh, because you have to, maybe I'm zoomed out too far. Or sometimes you have to change them. Yeah, those are not showing up because of some quirk that I don't understand. Let me show you how to get them. There they are. You see the red at the top there and the green down there and the green down there? That is showing you that the larger time frame, the 1 day chart, has crossed to the downside, a 2050 MA cross to the downside. So while that remains true, you'll have these red arrows at the top. It makes more sense when you're closer to the chart. Actually, it doesn't make more sense. But they're there. You know, you can see the period. You can see that, oh, during this period we're in the larger time from the 1 day chart, we're in a bearish period. So I can take short signals here, right? But when you're, for instance, in this kind of setup where they've now crossed back to the upside, you might be more skeptical and say, I'm not going to trade short during this period because I'm trading against the 1 day time frame. Strictly you're not, because they're both descending, but at smaller time frames you'll start seeing how that plays in. So these indications help. There's another one, larger time frame below its 20 MA and larger time frame above its 20 MA. If I switch them on, you start seeing additional arrows down here, and now the arrows there are quite big, and I'll show you what that's all about. You see these arrows? They're the little arrows that show us 2050 MA crossover at the 1-day chart at the larger time frame. These show which side of the 20 MA price is on. You see the darker red up there and the darker green down there. Price is above the 1-day 20 MA. Here, price stops trading above the 1-day 20 MA. That's bearish. And you can see them kind of flick. When price stops trading below the 1-day 20 MA, these ones switch on because now it's above the 1-day 20 MA. So that's just a visual cue to help you see what's happening at the larger time frame. But you don't have to switch it on. You can just switch these off if you don't want to see them. Switch on what you understand and what's useful to you. And then, add things as you start seeing them in my charts or start wondering what they are. And then you can switch them on. I'm very curious as to whether this is going to go up or down. If the bulls pull this lower today, I'll be very surprised. I think that everyone's tired after all of this. When they reached 9,600, which is like a critical level of support and resistance, everyone was just like, God, it doesn't matter. Look, even the bulls are not too active now. They got very active there, they got very active there, but today, its kind of price is just meandering. Mike, Pepe Pants, the reason why mine doesn't show, I'm glad you pointed that out. This is very important because I've been talking about EMAs, right? You get simple moving averages, which we normally use and which we've always used, and you get extended moving averages. And my house is about to get real noisy, people. It'll last for about 5 or 10 minutes, but I'll just carry on speaking. All of the MAs on this chart are simple moving averages because I've gone and changed them. If you go to your inputs in the MA settings, สวัสดีครับคุณสบายดีไหมครับใช่ครับทำอะไรอ่ะ pick up นี่คืออะไรอ่ะเดี๋ยววิวคิวนี่ไม่ได้ครับ okay. Sorry people, excuse me. In Thailand you have to greet people and you have to be friendly. You can't just say I'm working because that's rude. I think you all understand. In these settings, I changed the moving average calculation from EMA, which is the default, number 2, I changed it to a number 1, a SMA. And that is why, Mike, my chart MAs look different than yours, because I'm showing SMAs, simple moving averages. I'm kind of vacillating between them. I'm changing from EMA to SMA to see the benefits of the signals, whether they are reliable, whether they're on cue. I'm so sorry I can't help you. I'm busy making a video. Okay, Krab. This is the 5-minute chart with SMAs, and I'm going to switch on the bars so we can see where the signals are. So I want to see the background colors of the vertical bars. Now, why is this thing so down there? There's price flinging up. You see that there are quite a lot of signals here. Let's take it from a known good place where we know we got signals. This is a 5-minute chart, right? So the smaller time frame is 1 minute, the larger time frame is 15 minutes relative to the 5-minute chart. Here we get a 5-minute sell signal, for example, price, there's a beautiful MA signal as price goes over the edge here. And then we also, I know that there was a 1 hour sell signal. Yeah, here it is. This is the 1 hour because the big thick MAs here are the 1 hour 2050 MA. There's a sell signal. I'm so talking nonsense. That's 15 minute. That's 15 minute because we're looking at the 5-minute chart. At the confirmation level, we're getting lots of little C's. Those are 1 minute 2050 MA crossovers. Then they're up, then they're down, then they're up. The final one is down. Confirms the 5-minute sell signal. That 15-minute sell signal is confirmed by 2 there. We've got to ignore those. So I'm looking at where these signals are happening and whether it makes sense. Now, if we look at the same area, oh wait, and there's another thing. Right here, there's a conglomeration of sell signals. There's a red horizontal bar. That's important, right? We wanna get in to price as close to this as possible, right? There we started getting some confirmations. There's the crossover. There was a kind of a fake out crossover of this, but you'd expect to see that, right? You'd expect to see it sort of them touch or compress and then decompress. If I change the MA to from SMA to EMA, we still get a sell signal there, and we still get a 15-minute sell signal there, but this one here, I believe, is a bit late. And there's no crossover in the larger time frame. You see there's no 15-minute signal. They come close together, but they never cross. The 15-minute 20 and 50 MAs, they never cross. So there's no 15-minute sell signal at this very good opportunity to sell. Right, that was why I changed it, because I was like, hold on. And then I changed to SMA, and then I just left it there for the duration of this decline. Because even there, they don't touch. There's supposed to be, the SMAs make a 15-minute sell signal there, but it's not in the EMA. You see, so the EMAs are good for when price is doing, just let this chart load up. When price is doing nonsense like this, and like this, you see these corrective areas? The EMAs are giving us fewer signals, but because the SMAs are more responsive, they give more signals during all of this corrective price action and like there. So we want to use the EMAs during corrections, as we were in, right? When I showed you guys this indicator. So during periods like this, the SMAs would have given you a buy signal here at the top. Just as what's happening here, the SMAs would have given you another buy signal right here. But because these are EMAs, they're sluggish and they never cross over, and so you don't get a false signal during the correction. But once price is trending, this is a 1 hour chart, once price is trending down like here, sometimes the SMAs miss the signal because they don't make a crossover, and then they don't give you a sell signal on the best wave of the entire decline, which was this one. Oh, there is a signal. So it gives you a signal in the 1 hour chart, but in the 4 hour chart there wouldn't have been a signal here. because of the way that the EMAs are so sluggish. So it's context, people. We have to decide which we use and when. And we might switch back to EMAs just now. For the moment, I'm sticking with the SMAs in case this declines again. In case decline just continues, because, you know, this is a 1 hour chart. Those are 4 hour MAs, 20 and 50 MA up there. Price is holding below them. As far as we know, it's just going to decline, is going to continue according to the 4 hour MAs and the 1 hour MAs. You know, whether we, and this is EMA, right? If I go to SMA, which is that, it's much of a muchness in the 1 hour chart. Okay, so that explains why the EMAs and the SMAs look different, because they've got different response rates to changes in price. And that also means that we won't stick to one or the other. From now on, we can't just say MA. We've got to say SMA or EMA. Because somebody's going to say there is an SMA sell signal in the 1 hour chart, and somebody else is going to say it's not. There's no EMA sell signal in the 1 hour chart, and then we've got to decide what we do. So this is making us to be able to discriminate whether a signal is good or bad, whether it's a good opportunity or a poor opportunity, based on which MAs we use, whether it's EMA or SMA. And we've got to start discriminating, because obviously there's benefits to both, right? There are benefits to both. That's it, Mike. Yeah. People, linked in the description to this live stream is that video of hyperwave and that rudimentary discussion of moving averages. And there is also a link to the forum that discusses and describes the moving averages indicator. If you wanna follow that link, it'll take you straight there, since this is new and would be interesting. You guys can see I'm tired now. Look at my face. Okay, I'm exaggerating a little bit, but yeah. I have not slept a wink last night. No sleep. I sat and minded those trades. I had alarm bells going off. The one moment I tried to sleep, an alarm woke me up. It's been like that for weeks. People, we've been going for an hour and a half. Is there anything you would like to know? The website now works properly. There's some things that need to be updated or rejigged. Let me show you. You see up here we've got no transaction fees. I've got our Bitcoin, the cryptocurrency Bitcoin node is running, but I need to set up the scripts that fetch all of this data, you know, market cap, BNC index, Bitcoin global volume, transaction fees by miners, all of that, and these price things. I've just been too preoccupied. Once I got the website up and running, the SSL working and the DNS working and email working, because I had to reinstall all of that from scratch, I was like, I'll get to these things later. If you guys could just bear with me, I will get them up and running. So these need to be done and displayed. And then we need to work on a contingency. We need to work on a contingency for if we ever lose the server like we did, because it was only supposed to be down for a few hours, but when hours turned into days, we missed an important and very profitable 1 hour sell signal. The one we missed was this one. You see this one on the 6th of March, we missed that signal. We got back in contact with each other once price was near the bottom here during this decline, and then I was like, well, we can't trade the 4 hour now, we've got to wait for a sell signal in the 1 hour chart. And you know, by the time we got it, we were in hot water. We were in the trade too late. If we'd gotten in up there, that would have meant that we could have ridden this whole wave to the bottom and just stopped out at a profit, which would have been fine. It wouldn't have been a losing trade. It would have been a profitable trade, although disappointing right at the end because the bulls started acting up, right? So in future, there needs to be an alternate email channel, and we need to use those Slack and Telegram groups. Those who like Slack can use Slack. I'm going to gravitate towards, let me show my face. I'm going to gravitate towards the Telegram group because I like Telegram because it's open source, it's secure, it doesn't want to know my phone number and my EMEI. Is that the right word? Like the MAC address of my phone, man, and the SIM card provider, and whose identity that is on. I cannot deal with stuff like that. I start to sweat, my knees start knocking, I might pee. So I don't do stuff that requires me to reveal my identity, right? I'm a law-abiding and honorable citizen in every other regard, and a good friend for those people who are my friends, but I don't reveal my identity to somebody, some corporation or government. That doesn't work. So I'm going to be using Telegram. I should go make a turn there and introduce myself. If anybody cannot use Telegram for some reason, then I will jump and skip between Telegram and Slack. That's fine, can do. So in future, if there's any email communication breakdown, we can use those channels, right? Because then it's accessible from without a central server somewhere. I should also have a Gmail email address made available to you guys so that there is still email communication possible, and Gmail is perfect for that. The reason why I've got cryptocurrents, mail server running, right? Why we're not using Gmail for all of this anyway, which some people do, right? Like Tone Vase does that, and it's perfect. But it serves its purpose. But I want my email, I want our communication in my custody, right? So that if nobody is reading our emails and trawling them for content, how much Bitcoin is so discussed at that time of the year, and then they mention that exchange. And then, you know, when these people want to do their KYC and anti-money laundering and blockchain snooping, they can ask Google for that information. But they're not going to ask me for that information, right? They're not going to say to me, we want you to reveal all your emails, because I'll tell them, the server is in the Netherlands, I'm in Thailand, and I'm a South African now. How are you gonna enforce that? How are you gonna enforce me surrendering something to you? I'm not. This is not because of hyper paranoia. This is because I used to work for. I'll be careful how I say this. 'cause I don't want people to get like weird ideas. I used to be a Linux system administrator for a company that won a government tender, and I was administering the central servers of the government of South Africa's spy database, and I got an insight into how that works. I mean, I wasn't doing the spying, right? I was setting up the servers and administering them. The information that was in there was not my business, but I could see the information, and I was like, why is government collecting all of this information on the citizens of the world, not just South Africans? Anybody that buys a plane ticket or crosses paths with a South African citizen, where there's an official, whether it's a banking transaction or it's they book airline tickets at the same time, this goes into an international database, and every country collects it, and that's when I was like, I learned good practice in terms of not using public cloud free services, because it comes with certain drawbacks and caveats to your privacy and your autonomy, right? Yeah, and down the line, government is going to ban Bitcoin when they realize that Bitcoin is anti-state, that its purpose is to frustrate the state, that its purpose is to circumvent everything that the state wants to eliminate cash for and apply KYC for. When they realize that, some governments are going to ban Bitcoin. And that is when you want your involvement with Bitcoin to be firewalled, not just at that time, but in the past. Any information that Cryptocurrents has about you, about your location, about what you're trading, about how many coins you maybe discuss with me. I've got so many in this account, I've got so many in that account. What do you recommend? Those discussions, that is not information that people who are snooping you for taxation or for criminal involvement with Bitcoin, because it's criminal to own Bitcoin at some point in the future. They're not going to come and squeeze that out of me, right? So I don't want to make too big a deal of that. I just want to explain my reasoning behind it, just from best practice in terms of autonomy, privacy, and anonymity a little bit. People, I am so tired. I am so tired. I'd like to lie down. I was going to say I'd like to sit and watch a movie. I can't even sit. I'm going to sleep. I'm going to fall asleep. 5 minutes of a movie, I'm gone. Let me do this. Mehan, you on Telegram? Mike, yes. Possible to set alerts in Telegram, in TradingView. My Telegram username is Venzen. Yes, it might be Venzen Kausan, but Venzen. Matthias, you're welcome. You're welcome. If I knew years ago that I could do invite-only scripts for people, I didn't want to code my indicators and then release it to the whole world, like give it to Cryptocurrents members and then they give it to their friend, or it leaks somewhere and then it's all over the internet. And I wanted these things to remain a little bit private and in our in-group, right? We all can know this. I don't mind you to use my indicator, but I didn't know how to protect the code. And as soon as Tone showed me that he was sharing his indicator with invite-only mode for indicators, I was like, bloody hell, but why didn't I know about this? And this is immediately where I was like, I can share my indicators with you. I can make some indicators that are generally useful, and share them. You know, so that I don't every time have to say to people, hey, there's a 2050 MA crossover. It's like everyone can see it, you know. Everyone can see it. That's perfect, you know. So even if I'm not around, my desk, or you know, I'm going to be traveling to Malaysia for a day or two. So then the 2050 MA crossover is going to be so obvious, you know. It's like you don't need Venzen to tell you. There it is on the chart, so I can refer to it, and everyone can say yes, it occurred at that time UTC. Ormondo, if we go below 600, which I believe we are going to do tomorrow, right? I'm not saying 100%, I'm saying I'm like 90% sure we're going to continue going down after the bulls failed to hold this hyperwave scenario. We'll just go down tomorrow, or we might go down tonight, but I think it'll be tomorrow. Then there are two places we can go. The first support level is 6,100, right? 6,100, not 6,000, 6,100. It might spike to 600, it's 6,000, it might spike to 5,900, but the actual level where you want to take profit if you're going to be short, right? And I will be making TRs for that move. If we're going to be looking for at a take profit level near 6,000, I'm going to recommend 6,100, right? Because, and I'll show you why now. The other level where we could go is 3,500. And the reason why I choose that level is because that's the level of the 1 week 100 MA. Bit stamp, stamping the bits. Stamp, stamp, stamp. 1 week, switch off the noise. You see that 1 week 50 MA? The blue one? That is at 6,300. Why am I choosing 6,100? I was maybe looking in the OKX chart. That's maybe where I got that 6,100 from. The 100 MA in the 1 week chart is at 3,525. I don't think we're going to get 2,000, you know. That's exactly the level of the 1 week 200 MA. I don't think price is going to go there. I think the bulls are too excited, man. Even 6,000, they're going to get their knickers in a knot and start buying again. So if it's heavy selling, right, if it's heavy selling in the coming days or weeks, we might get 3,500, but I think it's going to be 6,000. And our target there will be 6,100. Let me see, there was another question. Sure, guys, you're welcome, you're welcome, you're welcome. I am in your service. Without you, I wouldn't have a job. Without you guys, without you paying members at Cryptocurrents, I wouldn't have a job. My job would be trading. Trading is difficult. Sometimes you spend weeks losing money. Sometimes you spend weeks making money, right? And I've got that allocation. I've got that allocation game going on, which I explain on the website, a funds allocation, that you are never 100% Bitcoin and you're never 100% cash. You always have some Bitcoin and you always have some cash. You can weigh the one side, you weigh to the other side depending on the larger trend, right? But if I do not cash out some Bitcoin during the times when I've made good leverage profits, where I've made Bitcoin, right? And then I go to local Bitcoins and cash them out and stash the money. Okay, I'm pointing at it. That's distraction. And stash the money out there in the jungle, secret hideout. I would not have money to survive on during the times when I'm not making profits. right? There are times in the weeks go by months where you're just not making the profits, right? You make a really bad trading decision. Maybe you sleep through an alarm and you get liquidated, and it's like, oh my goodness, there's like most of my account gone. So now if you had stashed cash, you during the good times, during the fat years, you can weather times like that. So trading isn't my main job, right? That's something that I slowly but surely build funds. Where I work, what makes me get up, motivate me to think about what am I going to say to these people about this chart? What can I do to make their lives easier? What can I do to automate this process? These kind of things, like everyone wants to be productive and creative, and market trading is not productive and creative, right? It's soul destroying work. The productive creative stuff, the socially useful stuff is what I do at Cryptocurrents. And if it wasn't for you guys, I'll say it again, you guys keep me in a job that I enjoy. A job that I enjoy. A question from Kun: why did you only use smaller short 20 and 50 and not 100 MA in the new indicator? Because on the shorter time frame. Yes, well, Kun, you're right. Why am I not including the 100 MA? This is a good question, and it's a case of complexity of code. Because TradingView's code is quite simplistic. It's like there's a word for it. Not simplistic, but it's rudimentary. It's crude. You can't do very complex maths with it. You can't set up very complex functions. You can't set up very complex checks. Now, to check that two MAs cross one another, that is a case of saying, on every cycle that you're checking things, if these are ever equal, right? If there's a moment when they're equal, flag that, all right? And that's what I'm showing you in the indicator there. That's easy to do with TradingView's PineScript code. But as soon as you've got three, and you'll see that in Tyler's video is very interesting about that, because I had to think about this independently. As soon as you got three MAs, right? So you got two, and you've got one that's crossing through both of them, right? And then later on, this one is also going to cross below. How do you tell a simplistic programming language that it needs to consider their context? How close were they to each other, and how close together were those two crossovers, or three, right? It becomes a really complex maths, it becomes like you almost need to do modeling inside of your program for the machine to learn. That's the level it goes to when you're dealing with three things. So PineScript can't handle that. It'll just like lock up everybody's web browsers to do that. That's one reason. The other reason is that if you just do the 20 and the 50 cross, you can flag that with an alarm or with an indicator and say a little C there. Okay, there's a cross. Now the trader can easily go to the chart and check it. You can go down one time frame, go to the 5-minute chart or whatever is the smaller, and go and see what are the three indicators doing. So you can go and verify, right? Without introducing complex, heavy code, that burns my brain cells. I do most of my thinking in my head, so I've really got to look after my gray matters, because I believe one can use it up if you get those heavy coding headaches. I'm sure there's brain cells dying. So, yeah, I just took this most salient route, the path of least resistance there. I hope that makes sense, because sometimes the MAs, when you get to coding the logic that we humans apply to the chart when we do analysis, a simple crossover is one thing, but when you start talking about MA compression, they're not actually crossing, but they're getting closer together. And you're talking about, what's happening at multiple time frames, interpreting that. We as humans can very easily do visual recognition and say, oh, this is what's going on. Just by glancing at it, we can say, there's a compression and decompression. To teach that to a browser, man, to teach that to even using a powerful program like Python, man, that is some heavy code. I got into like 10,000 lines of code and some complex classes just to teach the program how to differentiate context, And I had to think, like, what is compression of MAs? Like, how close must they be percentage-wise for that to be compression? Then you've got to start comparing to previous instances and say, this is a model, so you start getting into machine learning. This is a model of close compression, but adjusted it according to ATR, because if price is sub $100, the compression is going to be percentage-wise different than when it's like $20,000, right? Yeah, so crazy stuff. Before we go, I just wanted to show you guys one thing. Aries is saying, can't you use MACD, which just do the 2 MA cross and then match up the MACD with the third MA? That is possible, right? That is possible. But then we need to have we need to include MACD in the indicator, which can be done. We need to dynamically switch whether we're using EMAs or SMAs between MACD and the actual MAs. But that's a very good idea, and I was thinking about that this morning. I didn't want to mention it to you guys because I don't want to create false hopes or often I've got a good idea and I mention it and then it might take me 3 months to implement it, so I didn't want to create like that kind of scenario. But anyway, here it is. The reason why we're getting, and you mentioned this, Aries, you mentioned this. I'm gonna change to screen share, and I'm gonna go to hey. I'm saying hey because price is going up. I was really worried that it was going to go down because I'm not psychologically prepared to trade short, and I've got the documentation. The TR is prepared for you guys to trade short. You guys are on this chat because you're learning and you're proactive, right? And you've taken control of your trading. There's a lot of people in cryptocurrencies who are not proactive. They're either in early stages of learning, or they lack the confidence, or they're just not that kind of personality. They need guidance, right? And I'm willing to give people guidance. I'm willing to spend time with people in email and talk to them and say, no. About this, check this link, check that, think about this, look at that instance in the chart. I'm willing to do guidance, right? I enjoy it. I'm a qualified teacher. And I did adult and young adult education for several years, almost 9 years. So I enjoy mentoring and teaching and all of that. But, I can jump on you guys. Hey, there's a crossover in the chart now, in a comment with a timestamp on it. You say at this time you see there's a 5-minute signal, or there's a 1 hour signal forming. Check it out, and you guys might trade it. But there's some people at cryptocurrencies who need warning because they might be at work or they might be asleep. I need to prepare TRs for these people. Say there's a 1 hour TR potentially coming in so many days or tomorrow. Be prepared. This is about the level where you're going to want to enter. This is about your stop loss distance. You got to. Some people need that, and I'm willing to do that. But now I'm not prepared. I don't have the resources and the time to have drawn up these kind of things to say, okay, now let's think about continuing decline or a reversal to the upside. So that's why I was like quite jubilant when I saw that price is rising, because it relieves the pressure off of me, right? I don't have to suddenly like do things at 3 in the morning. There are some bad signals in here, and Raver also mentioned it. You see in this 1 hour chart, you see where price is advancing here, and here at the top, you see here, do you guys recognize this? We're coming down from the early March kind of stupid advance there, falling down, and then this indicator in that correction there, right at the top of the thing, it's giving us a buy signal, and then that buy signal stops out like at a loss, right? Because who's going to take profit there? You know, you're going to get into your buy signal in the 1 hour chart and think, well, obviously this is going to like go to the 4 hour 50 MA, right? That's what you'd expect. It doesn't go there. It doesn't even reach it because these bloody bulls are retarded, right? And then, sorry, my apologies for strong language. These bulls are being silly, right? And then they sell off before they reach target, and this false signal stops out. Now, there are quite a few instances of these bad signals right at near the end of a move. I noticed this with this indicator. Normally when I look at the chart, I don't see them because I just notice that it's a high, a corrective high. So why would I buy in over there? I don't believe the signal, right? I want the signal after the fact, not a signal going into a high. Okay, so the trick to eliminating these false signals from our indicator is MACD. Aries, I'm coming back to this point, and I thought about it this morning. Here is a 1 hour sell signal, and you can see that it happens as MACD comes below 0, right, and is already moving below its signal line. Then you get the sell signal, right, and they were 15-minute confirmations already, full valid signals showing you that this was coming. So why would you, once there's a 15-minute signal that's already been going on, you see there it is down there, that's the 15-minute signal. It's been running and running, and price is going up, and then now suddenly you get a 1 hour buy signal when MACD is already like, you know, reverse diverged from the previous high, and it's been running and running and running for so long. That condition of MACD is enough to eliminate this signal. To say, in other words, to say, if the signal comes while MACD is too far above or too far below a MACD 0, disregard it. Don't flash it in the chart. Here's another one. You see there's a buy signal right here, right near the top of that correction, and then it gets stopped down like at a massive loss, right? Same thing. MACD was, oh, that's so bad. MACD is actually crossing its 0 line at that very minute. And this is why I'm always coming with the kind of the argument, let's not trade against the larger time frame, you see, because the larger time frame is bearish. The 4 hour chart is coming down, and this is a buy signal into the 20 MA of the 4 hour chart. Why would you do that? Because this is an ongoing 4 hour sell signal, so why would you get into a 1 hour buy during a 4 hour sell phase, right? Yeah, so the indicator needs some refinement. I saw some instances where false signals can be eliminated with MACD. This is not one of them. Yeah. Was I showing the chart through all of that? Or was I showing my face? Oh, thank goodness. Yeah, if MACD is already extended, you see. There was one more thing. And why what I wanted to show you in terms of I mentioned head and shoulders, right? But actually, I never trade head and shoulders. I agree with Tone about that. Head and shoulder in Bitcoin is just not, it doesn't make sense, man. You just don't see them. But that one was so obvious. But there's a different technique that a guy from New Zealand called Kiwi Oz. Some of you might remember him from early days when I was writing at Cryptocurrents News. A trader called Kiwi Oz. I used to trade gold with him back in the day, and he showed me a technique of finding targets, right? That just blew my head off, because it's using the principle of the head and shoulders, but you can do it anywhere. You can do it almost anywhere. So for instance, in this chart, right, this is a OKX 1 week futures chart. And I'll show you how I got 7,600, right? In this chart, it might be a little bit lower. What you do is you take, after there's been an uptrend and then there's been a downtrend, you know, so this is a corrective wave, right? In the larger downtrend, this is kind of pushing up and then the trend resumes. You take any 2 points where they intersect, right? But it's better if it's like inside points. You see what I'm doing there? That's the last wave of the advance. This is the first wave of the decline coming down. You connect them so that you get a sort of a spirit level there. You get a level where you're going to measure from now. Then you drop a vertical from the highest point, right, down to that level, right, like that. Then you take this line and you simply extend it to the bottom, right? And then if you draw if you draw an arrow from it, I'm not going to make an arrow, but if you just like go sideways, you'll see that it more often than not, it hits the level where your price turned. Like so now. You see now? You can do that all over the place, man. Like for instance, here. This is a stupid example, but it's going to work. I bet you it's going to work. Right? I'm not going to take the wick. I'm just going to take the close of the body, right? Extend it upwards, right? And that there is the level where this stopped. You can do it. You can do it here, like inside. You can do a horizontal here, right, from there to there, and extend it. Measure it from there to there. And that one doesn't work. That one doesn't work. Probably because it's horizontal. You need them always sloping. You always need them sloping in the direction of the trend. Of you know, that thing. The sloping ones are better. But these kind of things I used to find targets before. I don't know if you guys noticed. In the Bitstamp chart, there's quite a few of them. I think I have to go to the 1 hour to show them, or maybe 4 hour. Yeah, there they are. Can you see that line? Let me change it to dark blue. I did what I just did there, and there's your top, right? See that? That there is your top. I did it from here. You see, I took an inside point. I didn't go from the bottom there to the bottom. You just go just inside the wave. You do that, and you project downwards that distance from there to there, project it the other way, and there's where the continuation of this wave stopped, right there. Here's another example. I measured from there to there, projected that distance down, and that was the bottom of the entire decline. You can try it for yourself. It takes some practice. They don't always work out, but if you make sure that during a decline, if you're going to put it on the bottom, it needs to slope from bottom left to top right. If you're going to now measure to the upside, it needs to slope from top left to bottom right. You see that angle there. You just project it up. This one here also works. I just drew a horizontal. What am I looking for? You see where I connected those points? I dropped it down, and this is where I was then, I think this is going to be the bottom, right? This is going to be the bottom, and what is that? Sorry, my chart is not playing along. 6,100. That's why I said 6,100, because of this. Because of that. That's why I wanted to show you this and why I wanted to come back to 6,100. Because 6,100 is not the level of the 1 day 50 MA, of the 1 week 50 MA. It is the projection of this structure that the bulls gave us to help us determine where it's going to collapse to. So 6,100 is almost at the previous low, but I'm quite confident about that number because this technique frequently works. 90% of the time it works. Okay, people. Thanks for attending. Thanks for your questions. On next weekend, I will let you know beforehand whether I will be doing a live stream or not, because I might be traveling. Once I get to Malaysia, I've got Wi-Fi, I've got an Airbnb, everything will be fine. But I'm going there by ferry because I don't like aeroplanes, because I don't like the passport and the X-ray and the probes and all of that. I don't like it. I prefer to travel by train or by boat. So I'm going to Malaysia by boat because I need to go to an island, right? So I'm just going to take a slow boat there and relax myself. So I might not be able to do analysis for a day. But this will all be announced before the time. Sure, Kun. Yeah, you see, if you ask the question, then I can give you the answer, because sometimes, because I'm the guy coding it, I think it's self-evident. But and it might be self-evident to somebody who's been a member for 4 or 5 years. But for a new guy like you, there's a lot of concepts, man. And it's easy to explain. And now that I've explained it, you've got a better idea what's going on. If you need any more explanation, write me an email or ask in the forum. Somebody else can answer. It needn't be me. Everybody, have a good evening. Yeah, enjoy my sleep. Whew, I'm telling you. I think a cold beer at the end of this hot day and one of these more, and then sleeping well. People, I joke with the general public that these are joints. I don't smoke marijuana. I smoked so much marijuana when I was a kid. When I was a youngster coming up, and I was a sound engineer, and I was playing in bands, and I had a bookstore and a music store, and I was selling all kinds of stuff there. That's when I smoked, man, until I couldn't believe it. But now what I smoke is this. Just for the record, right? This is palm leaf. You buy it in a roll like this. It's called bajak in Thailand. This is a kind of a palm leaf. And it's like Rizla paper. It's a little bit tougher, but it smells like sweet, and it's completely natural, and it grows down the road. Somebody chops it up and packages like this, and so it's all natural, organic, and that's what I like. And then I mix that with with like a local Thai tobacco. There's the certification number, and you can see this is tobacco in there. Tobacco. So yeah, when I joke with the general public that I'm smoking weed, no. I would not be a good analyst. I would not be be able to be held accountable and responsible to you, my clients, and my subscribers if I was doing analysis and doing live cast smoking weed, right? That would be funny. So just for the record there, in case you hear any stories or you were maybe wondering yourself. People, thank you very much. And with that, I'm going to say good night.